Hey, you guys, this is going to be episode 1.5 of learning how to become a day trader. Simply because the things that were discussed in episode 1, I want to actually pull them on a chart so that you pull them up on a chart so that you can get a visual of what I was talking about. So let's begin. I have a few things that we will review today. So, of course, this is Tradingview. This is a charting platform where we use two charts. So before we really look at the charts, I do want to go over the subscriptions. I have an essentials plan, but sometimes I think about getting the 4 chart. I think about getting the plus because of the 4 charts, but because I do have multiple screens at home, that's the only reason I don't get this plan, because I could just pull TradingView up in multiple windows and pretty much look at 3 charts at a time. Not saying you'll need some. These are the pricings. This might be annual. This monthly. This the monthly. This tells you what it comes with. If you're a beginner, you could just get the essential, or you don't even have to pay for it. I know some people that don't pay for it, but if you don't pay for it, you will not have certain access. And also, if you trade futures, CME data is not included. So you will need to pay for CME data. CME data is to get live futures market trading, to see exactly what's going on the charts as it's happening, because there will be a 10-minute delay. But I think it's only a couple dollars. Let's see. $7 a month, yes. So it's only $7 a month extra so that you can get live CME data. Okay, I pay for it. Real-time CME features is what they call it. But all right. So this is Tradingview. My baby is NQ, so we're gonna go to NQ. All right. So uptrend versus downtrend. Okay, let's go. So we're just gonna start right here. These are the time frames. Don't worry about the R's because those are ranges, and you don't have to use a range chart. That is something we can get into in another video. This is a 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly. You can go right here to change it by the seconds, the minutes, hours, days. And then range is something that I just kind of got hip to, which is another reason why I would not be telling you guys about it. All right. So I went to the hourly so we can look at trends. These are candlesticks. Now, I personally have mine on blue and pink, but that's because I changed my chart setting. I right clicked it, and then I went to settings, and then I'm gonna go to canvas and no symbol, because symbol. If you, I really don't want to, let me see. I don't want to change everything, but I'm just gonna go ahead and put it back as it would normally be. This is how you change your settings, okay? So this is what I meant when I say green is an uptrend, bullish, red, bearish, or bearish candle. You see how price has been going up? That's an uptrend. Price was going up, up. Then it got all the way up here, and then it started coming down, 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 down. Then it went back up, then it came back down. Then it went back up, then it came back down. Then it went back up, down, up, down, up. From here on up is an uptrend. From here on down is a downtrend. not just because the colors of the candles are red, but because price has been going from, if you look over here to the right of your screen, you'll see the price of this. This is NASDAQ or NQ. So this tells you if price was way up here, price was at $30,379. Okay. And then what day is this? May 27th. Look at the bottom of the screen right here. May 27th. Let me move this out the way. Now, why is it two of these things? May 27, 2026, 8 a.m. Price was, this is the 8 a.m. candle. Price was way up here at some time frame during that hour, because these candles represent 1 hour of price action. And then price, May 28th, 2 days later, price got way down to 29,763. So that tells you price had been going down. The end of this candle, by 9 o'clock, if this is the 8 a.m., by 9 o'clock, price got so low. Price got as low as $29,937 by 9 o'clock. That's where it closed at. Because, and how do I know that? Because we know that bearish candles open at the top and close at the bottom. So that is how you know price is going down. Now I'm going to remove that, right click, remove 5 drawings. If I go to here, this is 30 minutes. Actually, let me go back before I remove my drawings. Let's go to the 30-minute time frame. 30 minutes. So each candle represents 30 minutes of price action. Okay? 30 minutes. This candle is, look at the bottom of the screen again. May 27th, 8:30. So this is 8:30. The 8:30 candle. And price had opened there, closed there, open here, closed here, open here, closed here. But it went as far as here. Open here, closed here, right? Okay. So from these couple of 30 minutes, so these 2 hours price shot down. Why did I say 2 hours? 30 an hour, 32 hours. Because each candle represents 30 minutes. These are all red bearish candles. This green candle right before it is a bullish candle. It opened here, got up here, but closed right here, and then price started to go down. If you look from right here, right now I'm going to remove these drawings. If you look from right here, right, this little T looking like candle, which we consider or call doji candles. We'll get into candles, different types of candles, maybe in this video, maybe in another one. It might be this video. We already talking about candles, right? From here, what day is this? May 26th. And this day is May 27th. Price had been going up and going up. Look at price. It came all the way down. It started changing and then going back up. Does that make sense? I hope so. I'm trying to explain everything in a way that's going to make sense in layman's terms. Okay? So we went over uptrend when price is going up. We went over downtrend when price is going down. Price is going up. Price started to come down. Okay? Okay, so we know that this would be considered what? Bullish or bearish if price is going up. Correct. Price would be considered bullish. And if this is going down, it would be what? Bearish. Now, you don't have to trade patterns. Like, I hope you guys remember you don't have to trade patterns. Okay, right here. Let me find my tools. These are your tools. So you can edit your charts the way you like them. Is it on here? Yeah. Okay. I feel like I just seen it. Okay. Let's say we're starting right here. Uh-oh. I didn't mean to put that. Okay. You see how that looks like a W? Is it a perfect W? No. There's going to be times where it's more of a perfect W or M, but the charts tend to make what appears to be a W, which is a double bottom, because this is a bottom and this is a bottom, and then it'll make M's. There's just certain patterns that the charts tend to make. Like I see them, but I'm trying to make them a little. Okay, let's say. Why do I keep doing this with this 5? You see how that can appear to be a M? And like the more you look at the chart, it's like, oh, okay. You can kind of see it. And you can see it pretty much on multiple time frames. It's not just, you see how I didn't draw this on the 5-minute time frame, but you still see it? Because this just represents 5 minutes of price action versus 15 or 30 minutes worth of price action. Okay? So you just have to have your candle spread wide enough. Oh, perfect. Perfect. Not perfect, but perfect. Look at this. You could even say right here, right? Look at that, M. Look at that. That's a 5-minute. Perfect. I know I was going to find a perfect example. That's pattern trading. If you looked at it like, oh, okay, it's about to create a double top. Or say, you see it like you think it's going to go down to finish this M off. Do it always happen like that? No, because we know that trading is a probability game. But I have taken trades off of that. But don't do that just alone. Okay? Okay. Do you see up here where it says indicators? There's different indicators that you can use. I don't use many indicators. I'm not going, let me remove everything. Personally, I do have things that are favorited. Pretty much everything that I like that are favorited are by Looks Algo. I use these two from my new mentor. That he uses them for certain reasons. But if you hear people talk about indicators, let's just put fair value gaps. Okay. It started marking out the fair value gaps. It marked out a bullish fair value gap here, a bullish fair value gap here. Uh-oh. Reset chart view, because what happened? What happened? Oh, I know what happened. Okay, I'm like, what the heck? Why is my chart not showing? Okay, now reset chart view. Oh, wow, it took all my indicators off. Wow, it took all my indicators. Now this one I do use. I do use this one. And I just typed this one on for y'all. I'm not going to explain what my indicators that I use are for right now, simply because you guys are not that advanced. Okay. It marks the indicator, it marks it out on each time frame, the indicators I use, but you don't need these because that's not what you're talking about. I just want you to show you these are indicators. This big green candle is an indicator because if I turn all the indicators off, these right here is going to show you what indicators you have on. This chart is blank. Nothing is on it but candles. That's it. That's it. Just candles. Nothing else. Some people use, I used to have the volume bars on, but I don't use it. Like, I see what price is doing actively. So I don't use that. Some people use like EMAs. You might hear about EMAs, moving average. I once used it. You might hear about SMAs, simple moving average. Let me show you what that looks like. This line. And then let me show you what EMA look like. There's another line. I don't use them. You might hear about VWAP. That's another known one. I don't think they use that one. I think they use, a lot of people use, is it this one? I don't know which one they use because I don't use it. But indicators just help you with identifying the direction. But remember, there's a delay. So please be mindful of the fact that there's a delay. We went over time frames. Okay. So remember when I was telling you guys, when price leave these long wicks, this is a bullish candlestick, right? Price open right here. It closed up here. But I do want to point out, price opened at the bottom. Okay. Sellers push price way down here. But buyers pushed it back up and said, we're going to close right here, baby. Okay. And I said these long rejection wicks pretty much tell you if it's a long rejection wick at the bottom, we about to go up. So that's good for buyers because that's exactly what happened. Even though sellers had pushed it way down here, buyers stepped in and said, no, 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 we closing right here. And then price did what? It went up. Okay. Okay. Now, this is a bearish candle. Price opened here, got way down here, but buyers stepped in and pushed it right here, leaving this rejection wick. And then what did the price do? It went up. It didn't go up all these candles, but it still went up. It went up to right here, but this candle closed right here. Because remember, the wick still tells you where price went to, just not where price closed at. Okay. All right, let's look for some more long wicks. Same here. It closed up top. Price opened down here, went all the way up here. Sellers left, pushed it down, and then boom, price shot down. Okay. I want you to see what I'm talking about. Here, you see rejection. Let's look at this candle. This middle green candle. Price opened here, closed here. But don't forget, sellers pushed it all the way down here. But then buyers stepped in and pushed it up here. So we left that rejection wick at the bottom because buyers said we about to what? Push price up because the wick was at the bottom. So it's going to the opposite direction of where the wick is, especially the long wicks. Another example right here. Price was already going up. We saw that right here, right? This is a longer wick. Price opened here. Sellers pushed it all the way down here. Buyers stepped in and closed it right here where the body at. Okay? And then because the wick is at the bottom, we going up. And it went up. It went up. And that's on a 15-minute. You can see it on the 30-minute. Look at the wick. And then it go up. Wick to the bottom, price go up. Wick to the top, price go down. Let's look at some different days because we're looking at the same day. Wick to the top. Hold on, baby. Wick to the top, price go down. Y'all see that? Okay. All right. So y'all see it's on. Y'all see it's on every time frame. Wick to the what? Wick to the what? Okay. Wick to the what? Wick to the what? Wick at the, where we going? Okay. If wick is down here, where we going? Okay. If wick is down here, where are we going? If wick is up here, where are we going? Okay. I just want to point out if wick is down here, where are we going? If wick is to the bottom, where we going? Okay. This on every time frame because the charts repeat itself. Now that that's out the way, let's continue to move on. We looked at a few things so far. I'm just going to dive a little bit deeper. These are some tools that you can use. These are different lines. This is Fibonacci. You don't need this right now. Chart patterns. You really probably won't use this right now either. Oh, long position. This is when you're about to enter a trade to see. Let's see. It tells you. It gives you information. So it tells you if this helps you set like your TP where you expect your TP to be, so you could have an idea of how much money you're going to make. And they give you your R risk to reward ratio right here. I'm not gonna say you don't have to use it because a lot of traders do use it. And I do believe that it is a great tool. I don't use it, but that's just because I'm going to start more so for this part. I'm going to use it for the stop loss aspect. Normally, I mark my charts with like lines. So if I get in the trade right here at this price, whatever this price is, and I'm looking for price to go, I'm gonna just say right here. I'm like, okay, I expect price to get right there, right before that red line, right? Or let's just do it right here. I'm looking for price to get right before, right to this green line. Let's do it like that to be more realistic, because that would have been a big old trade. If I'm doing that, I already have I have this marked out. So I don't use the long position. Right? Where as some people, they are using this. They might use this. I don't be using it. Okay. I feel like, but if I got to do all that, I could just draw the line and call it a day. 165. This tells you 40 points. It tells you how many points your stop loss is. I don't use it, but you can. That's for a long position. Then they have one for a short position if you're entering a trade here, expecting price to go down. So if you're wondering what that is, that's that long and short position. Okay? Okay. This is my most used thing is this. I use that every day. And then here goes some like emojis. All right. Now that that's out the way. Uh-oh.